So welcome to the funding landscape, and thank you to all the panelists who will walk through this with us. As illustrated, there are numerous opportunities for funding at different stages, different structures, and different requirements. The good news in West Virginia is we all know each other and work closely together. When an opportunity or an idea comes into our pipeline, we strategize the time frame and resources necessary for development, the funding required to get to market, and look to determine as a group how to best collaborate. Let's take a walk through each of the different groups, and if there's time at the end of the session, we can take questions. Contact information for each presenter will be provided. But let's start with Rich Gersh of Gersh Consulting. Rich Gersh is president of Gersh Consulting and chairman of the board for Voltari Bio. Rich has extensive experience working on all sides of the entrepreneurial coin. He's worked in venture capital, fundraising, and entrepreneurial assistance roles for multiple well-known and well-respected firms and universities. He serves as a consultant to Tech Connect West Virginia, assisting them in educating entrepreneurs on how to apply for and win small business innovation research and small business technology transfer grants. Rich will be speaking about startup funding opportunities in the governmental sector, specifically SBIR and STTR grants. And so turn it over to Rich.
Thank you, Guy. And thank you all for attending this really great series that has been put together. Talking this morning about the SBIR and STTR programs, and just for a quick grounding on that, that's Small Business Innovation Research and Small Business Technology Transfer. The programs are sort of the overarching directive on that is they're for-profit small businesses. So nonprofits, not eligible. Large businesses, medium businesses, not eligible. And when I think of a small business, I typically think of small startup companies, but these are really, these are available for companies with up to 500 employees. And so a small business is not really quite so small when you take a look at it in that perspective. The agencies, or the purpose of these grants are to bring funding, research and development funding into the small business arena. And so federal agencies, once they cross a certain spend level for research with outside organizations, they're required to participate. And so the funding is not intended to make the company great. The funding is intended to build products and services that serve the agency missions. And so that's really an important distinctive piece of the pie there. You're proposing something that is important to develop a product that's important to an agency. There's 11 federal agencies that participate. They make over $3 billion of awards on both grants and contracts every year. It's the largest source of seed stage funding in the country or in the world, really, in an ongoing basis. It's a 3-phase program. Phase 1 is usually about 6 months, and that's a proof of concept. And we're looking at the diagram that Guy has put up here for us. That's really the sort of the technology discovery and proof of concept. And so if you have a really solid idea, you have sort of some
Oh, it looks like we might have just had a technical difficulty there. Let's see, Guy, if you can come back on and go ahead and introduce our next speaker. It looks like we might have just lost him. Maybe he'll
landscape slide.
Oh,
there
we are.
Yeah, thanks. It does extend.
Okay, we're cutting in and out with Rich.
Yeah. Do you want to flip over to Tim for a minute?
Yeah, Guy, let's go ahead and go with the next one. I'm going to mute Rich, and then I'll send him a message telling him that he's cutting in and out, okay?
Okay, that sounds good. All right, so our next speaker is Tim James. Tim serves as a loan officer with the First Microloan of West Virginia, the first organization in the country to offer small business administration microloan programs across state lines. The program provides financing at a fixed interest rate for use in opening or expanding a business, buying inventory, purchasing equipment, or supplementing working capital. Tim will be discussing traditional funding through the commercial sector and what the First Microloan Program has to offer. Turn it over to Tim.
Thank you, Guy. Good morning, everyone. My name is Tim James. As Guy mentioned, I'm with First Microloan of West Virginia. We are a provider of what is called the Small Business Administration's microloan program. And by definition, it is just that. It is a micro loan. What they mean by micro is smaller intentions, up to $50,000. It is a business loan. We focus on the debt financing. We don't go into the equity portions of things. We are sometimes considered the bad guys because you do have to start paying us back immediately versus over time. So we are typically structured as a term loan. And with the loan, there are some requirements. Eric was talking earlier about the business plan and projections and so forth. That is a major requirement with debt financing, be it traditional lenders such as your basic banks, or the non-traditional such as the microloans and other agencies. We base our entire choices on what your business plan is and what your needs are for that business. We focus more on I would call it the back end, if you will, when you actually have your R&D completed, you're at the point where you're making your product and moving forward, because we are typically purchasing assets. The major requirement with the debt financing portion is you will have to have assets for us to hold as collateral. We don't hold equity positions by any means. We like physical assets, machinery, inventory, things of that nature. And in the microloan program in particular, even though it's a small piece, we are traditionally focusing on financing equipment, financing inventory, and some working capital. We will do working capital as we move along on those things. But it is a business loan. We actually, once we close the loan, we give you the money to do your purchases of what you're buying. We then, put liens on those assets as the collateral base or any additional. And then within anywhere from 30 to 60 days, you're starting to pay us back on the terms that are made up. So if it's like a 60-month term, every month you're getting a bill and you have to pay on that. And also being the bad guys, if you don't pay on a loan, we come and take the stuff that we gave you the money for, which is the bad part of that. But we are basically here to help. Once you have the initial phases completed, you have your discoveries, you have your designs, the proofs and so forth. Now you're going to market, you're commercializing, you're actually selling the stuff on to the world. And that's where we can step in with the purchase of the more asset-based pieces.
All right, great. Thank you so much. And Guy, it looks like we have Rich back. If we want to, Rich, if you want to go ahead and finish up. Sorry, you got cut off there. It looks like you had a little bit of a technical difficulty.
I did. I'm not sure where that was, but I am sure that it was on my end. Thank you. I just have a couple of more quick points that I want to make, and then I'll step back. So one of the big pieces of the SBIRS TTR grant and contracting program is these funds are non-dilutive. And for startup people and investors, that is absolute music to your ears, because you're getting substantial startup money, $250,000 for a phase 1 and up to $1.5 million or more for a phase 2. And you don't give up any ownership of your company, and you retain any intellectual property that you develop. And so that is a powerful piece. And companies that I've been involved with and written these proposals for, it can certainly be transformative with product development strategy. And here's something really cool about having a business in West Virginia and pursuing these funds. The state will actually pay you to try and get this money. It's not going to cover all of your costs for putting together a phase 1 proposal if you're hiring outside consultants, but there's a $2,500 grant that's available once you have submitted your phase 1 program, and that's called the phase 0 program of the Small Business Technology Transfer Entrepreneurship and Investment Fund. And so that's funding that is available to West Virginia-based businesses. There's also a matching component of that for phase 1 and phase 2 awardees. So if you're successful when you're successful in receiving an award, there are state matching dollars that are available as well under certain conditions. If you're interested in learning more about the program and want to hear me drone on for at least an hour and a half, our next Tech Connect Best in West Virginia Small Business program is going to be this week. It's March 11th at 3 p.m. And you can sign up for that on techconnectwv.org. And now I'm done with my sales pitch and happy to answer questions once we get to that point.
Great. Thank you so much, Rich. Guy, back to you.
Yeah, I'm taking a look at the agenda, and I guess I'm the next one up. And so my name's Guy Peduto. I'm with the Innova Commercialization Group. As far as background, I guess probably about 25 years experience working with startups back to the internet startup days, and got really interested in trying to move things forward. I would describe the Innova Commercialization Group maybe as a venture development organization, which is kind of a little bit of a hybrid, in that we like to look at concepts and we like to look at ideas, and we like to say, how do we take that concept and idea and make it market ready, and then do early stage investing in them. We have two types of funding available through our group. We have grant funding. So when somebody comes in with an idea or an opportunity, as Eric mentioned, we want to at least see, an overall concept or strategy that we can start building on. And what we'll do is we'll take a look at really three factors there. What do the personnel look like? And what resources might they need as far as mentorship, subject matter experts, guidance within a marketplace, professional assistance. Do they need legal help? Do they need competitive analysis? Do they need technology analysis? And what resources can we provide? And then technical assistance. How far are they along in the development of the product or service? And where can we bring other resources to help them actually design, develop, prototype, beta test, and get market ready? For all of those, we have grant funding that's available through different federal agencies and philanthropic agencies. And so we try to put a scope around what are the resources that are needed, how much funding is going to be necessary, and what grant funding can we provide. And again, as Rich mentioned with the SBIR program, the beauty of grant funding is it's not debt. And so it is not something that is repayable. And so we can use this to actually put legs under the idea that you have. When it gets to the point where it's ready for early stage investing, as I mentioned earlier, usually all of the investment groups will talk about an opportunity together. And we'll take a look at the timeline, the resources that are necessary, and we'll try to determine what is the best package of investment groups that are available, and how will we tranche it up, how will we divide it, and how will we make it available. We usually do debt to equity, which means we'll take a look at the market, your market plan, the timing, and then we'll structure up the debt to basically match. It's not an immediate repayment. We can structure it up where there's a time frame in there to begin repayment based upon sales, based upon revenue. We'll take a look at the interest rate that we're going to charge, make it fair and equitable, and structure up individually based on the necessity and based on the needs of the organization. And so it's hard at the beginning to determine evaluation. And so that's basically why we use debt. Our next speaker, Michelle, is going to go into a little bit more detail. And Michelle O'Connor is with the West Virginia Jobs Investment Trust. We work very closely together with them in looking at each opportunity that comes in and looking at how do we collaborate on an early stage investment. Michelle O'Connor has more than 30 years experience in the finance and banking industry and is the investment manager for the West Virginia Jobs Investment Trust. a leading West Virginia venture capital firm focused on turning the innovation of new ideas into successful world-class companies. She serves as a board member, treasurer, and chair of Tech Connect West Virginia, and is an advisory board member for the West Virginia Small Business Development Center and the West Virginia Women's Business Center. Michelle also has extensive experience in entrepreneurship, having successfully launched and managed several small businesses. Michelle will highlight startup funding opportunities and the role the West Virginia Jobs Investment Trust plays and what they look for. So I turn it over to Michelle.
Thank you, Guy. Welcome everybody to our presentation. Eric did a great job earlier this morning on walking through our thought process of what investors do and think when we approach a deal. We're slightly different than a lender. As Tim pointed out, we're not necessarily into making sure you have collateral or cash flow because we're more of an early stage investor. So first of all, West Virginia Jobs Investment Trust is the state's venture fund. We are a general fund. So what that means is we invest in everything from biotech companies to trout farms and everything in between. And so the good news is we're a general fund. The bad news is a general fund. And I have to now learn everything about your business and where you fall in that category. We typically don't lead deals because usually in this stage, companies are needing more than we can actually invest. And so we do help source and syndicate deals, work with a lot of people that you're going to meet today on this panel. And you would think by our name and that we are a state venture fund, that we would mandate that so many jobs have to be created for so much money put in. And that's not the case. What we're looking for is jobs to be created, good paying jobs to be created within the state of West Virginia. And, we know a tech company is not going to have as many jobs as a manufacturing company. So we take that into consideration. Like I said, we do syndicate with deals so that deals can be completed and businesses funded. Through the 3 steps, we are step number 3, which is funding. We have actually successfully syndicated over $9 million in the last 18 months. And that has been from JIT funding, SBIR, STTR, as Rich talked about, and also private matching dollars. So we're pretty successful. Our typical structure of a deal is about $250,000 to $500,000. We usually tranche it in so that as your company and your business meets specific milestones that we agree upon, a different tranche of funding comes in so that we can also have money set aside for follow-on funding. As Guy pointed out, sometimes companies are so new that there is no valuation, as Eric talked about. And so we do a convertible, which is debt up front, and then we have the option later on to convert to equity. If you're an established company and there's a valuation, we may come in as equity. And recently, we've also, because it makes more sense, as Eric talked about, family businesses with really no intent of ever exiting, a revenue share deal. So we come in, share in the revenue, and then once a certain ROI is obtained, we then exit out of the deal. So what's the process? It's not a quick process with us. Investors are a little bit longer in our review and getting to know your company and really wrapping our hands around what you are doing as an entrepreneur and your ideas, much more than a lender would be. So first of all, we meet, we hear what your idea is. Then we go out and we do, some quick searches, talk to people. Hey, we've got somebody who's, looking at this idea, and does it have traction? Does it, make sense for our fund? Does it make sense for, a funding? And we start to answer internally those 5 questions that Eric asked earlier. And so once we get to the idea that, this might have some validity, that some traction that we might be able to put some money in, we then do what's called a pre-DD or pre-due diligence process. We go through, do some, background information on the market you're in, the sector, the opportunities, where does it fit? Where's the business at? Does it make sense how much money you're going to need? And can we find others if you need more than we can put in to help us syndicate and complete the deal? And then we'll put together a term sheet, which is basically our agreement on this is how we think our money should be put into your company, our expectation of return, interest rates, warrants, timeline of repayment, maturity, all of that. And then we go before our board, get approval or not approval, and then we put it back into the attorneys for papering process. And then at that point, we then are entering into a long-term relationship, because what we bring to the table as early stage investors, we think, is first of all, we're going to set your company up and make sure you have your governance in place. You're going to make sure that your company is structured right. You're an LLC or a C Corp. You're doing your annual meetings, your quarterly meetings. You're putting your financials together. You're putting together your annual budget that's being approved by your board. We usually take a board seat so that we can have some input and help you along this process. So when you're ready for that next round of funding, you have all the paperwork in place so that a Series A or B or whatever funding you're looking for is much easier, because you have all this governance and structure in place. And I'll give you a real quick examples of some of the transactions we've done. So we've worked with companies that have spun out of the university. They had an idea. They were able to get maybe a patent or a trademark on the idea, and then they needed to create a company. We worked with Inova, as Guy said, with grant funding, got them business created. They went through, as Rich talked about, federal funding through SBIR, SPTR, and were able to set up a company, get their customers, and then we helped them with the follow-on funding, and they're doing quite well. We had another company that was a long-term manufacturing company, has been a West Virginia company for 25 years. And due to an economic downturn, they needed to pivot into a new sector. And we were able to invest in their company to help them buy the equipment and help them seed the opportunities so that they could go into a new market. And, you know, they're doing quite well. And they've actually been able to hire about 18 people even during this COVID pandemic. And then the last example I'll give is we've done a bridge note. So a company's up and running and they just need funding to help them put a piece of equipment into their plant, and they need to put it in, and they have other bank financing or maybe EDA money coming in, but they need to prepay for the equipment to go into their plant. And so we'll come in, front the money, and then when the final financing comes through, we get taken out. So that's a really quick overview of what we do and kind of the structure of what we have. And I'll be available for questions whenever we get to that point.
Next up, where'd I go? Well, there we are. Next up is Dawn Morrison from Blue Tree Allied Angels, which is a very friendly group that we're affiliated with out of Pittsburgh. Dawn Morrison is a serial entrepreneur and visionary leader who has consistently leveraged technology to improve the customer experience and top and bottom line results in the consumer product space. Dawn has been involved in the growth and development of several businesses, including American Eagle Outfitters, from 1 to 165 stores as president and CEO, Sundance Catalog Company as executive director, and Bear Creek Corporation as senior vice president of sales and marketing. Since 2012, he has served as chairman of Deal Flow for Blue Tree Allied Angels, a Pittsburgh-based angel investment organization, and also serves as an entrepreneur in residence at the University of Pittsburgh's Innovation Institute. Dawn will discuss early stage funding available in the commercial sector and what Blue Tree looks for.
Thank you, Guy. Welcome, everybody. I'm happy to be here. One of the things I like to say is that I think I have the best job in Pittsburgh because I get to wear a lot of different hats. As Guy mentioned, I'm chairman of Deal Flow for Blue Tree. I'm also an entrepreneur in residence at the University of Pittsburgh. I also volunteer time at some of our local incubators and accelerators. But the common thread in everything I do has to do with working with entrepreneurs every day. And I get to hear just amazing ideas, and it's really what keeps me going, because entrepreneurs are the ones that really change the world. Today, I'm going to talk about the funding landscape. As Eric talked about earlier, you know, there are a lot of very viable businesses, but not all of them are angel fundable, and that's okay. There's no judgment. But you might have a family business or a business that is closely held that might be very sustainable and profitable, that doesn't need outside money, and that's okay. There's a lot of different funding mechanisms, usually through traditional banks or microloans, as you've heard about. What I'm going to focus on today are the businesses that are more high tech, that need other people's money to grow and expand quickly to take advantage of the market opportunities. In the pre-COVID days, when I would speak about this topic in front of student groups, I would start off by asking people in the audience who's got $1 in their wallet. And of course, there's always a show of hands, and some naive person in the front row holds up $1. And I go over and take the dollar, and I fold it up into a smaller and smaller and smaller fold. And then I stick it in my pocket, and then I keep on talking about my my project here. And it's funny to see the look on their face, that I put their dollar in my pocket. But the point I was illustrating is that whenever money changes hands, there's a fundamental change in the relationship between the company and the investor. So if you only remember one thing from my words of advice today, is that in all things in life, choose your partners wisely. Choose your partners wisely. This is especially important for your financial partners and investors. Why do I say that? It's really critical to find the right money. A lot of entrepreneurs that need other people's money are just looking to find that first person to say yes. But believe me, from experience, it's really important to find the right money to invest in your business. And what does that mean? It means that whoever is investing in your business has to share the vision that you have. You have to have very clear goals that are mutually understood, agreement on the milestones, how long it'll take you to get to different places, and importantly, an understanding of the industry. One of the things we try to do at Bluetree when we evaluate whether we're going to put money into a business or not is we do kind of an internal audit and ask ourselves, can we help this business besides our money? And that means, do we have within our member group experts and expertise that can help in this particular area? And often we do, because we have such a diverse group of investors. So, the most important kind of money is the money that will help you realize the vision of your business. But just keep that in mind. Try to find the right money. I'm going to talk about the funding landscape because I work with entrepreneurs pretty much every day, and a lot of early entrepreneurs, first-time entrepreneurs, don't really understand the funding landscape. But across the top line is basically the development stage of a business. It goes from the aha moment in technology discovery to proof of concept to initial design, test and develop, build and scale up. So pretty much every company goes through that kind of progression at different stages. And this is what's really important for entrepreneurs, is to really understand what type of money you need. Oftentimes the entrepreneur will say, I need $5 million to commercialize my product. It's very unlikely you're going to go out and find an investor to give you $5 million right off the bat. So what most companies do is they'll start off with early stage funding or pre-seed funding. And that's usually in the tens of thousands of dollars. And if you look at the chart below, the funding stages are the sources of funding. And oftentimes they're referred to as the 4 F's: friends and family, founders, and the fourth one is fools. That's the inside joke. But there's also, as you've heard, there's SBIR grants that are government grants. And there's also some funding that's often available from local business incubators and accelerators. But those are typically in the tens of thousands of dollars. They're enough to get a lot of companies going, but certainly not enough money to get you to where you want to go. A little bit further down the path, you get into seed funding, and that can come either from individual angels or angel groups like Bluetree. And if you look at the investment needed, up on the second row there, Angel groups are typically in the hundreds of thousands of dollars up to a couple millions of dollars. And then further down the path, you see VC funding and institutional investors. And then at the bottom, you have the company valuation. And there is no right or wrong in terms of valuation. The only thing I will say about valuation is that it's a lot like selling a house. If you overprice it, you're not going to sell it. And if you don't sell it, you have to go back to investors with your hat in hand and then say, well, you know, I thought it was worth X, but now I realize it's worth Y. You don't want to be in that position. So, you know, the goal of finding a right valuation is listen to your investors. You know, by nature, entrepreneurs want the highest pre-money they can get, pre-money valuation, and investors want the lowest. But at the end of the day, it's got to be a number that's agreed upon by both, and it's fair to both parties, because you don't want to go into a relationship where it's totally one-sided. The other thing that I wanted to talk about is the type of funding. Often in early stage investments, the valuation is really not known. When I joined Bluetree close to 10 years ago, I had been involved in mergers and acquisitions of established businesses, and I was fairly comfortable with different valuation methodologies for existing and up and running companies. But I really was neophyte in understanding how to value early stage startups. So I went to a breakout session at the Angel Capital Association, which is now close to 600 angel groups in the country. And they had a breakout session that talked about valuing early stage companies. And there were 3 or 4 main methodologies used, but all of them had very similar criteria for what adds value to a company or what subtracts value from a company. You know, a seasoned entrepreneur who might have made money for his previous investors, that adds value to a company. Company that has patents, that adds value to the company. Cash flow adds value to a company. There are, you know, half a dozen or so criteria that can have a positive impact on your valuation. If you have a valuation that's unrealistically high, you know, you're going to get pushback. One of the questions I get asked frequently is Bluetree just like Shark Tank? And other than the polished pitches, it's really nothing like Shark Tank. And what I say in response is it's really more like American Idol, because, you know, we typically look at 3 to 4 ideas a month, and, you know, you're on stage and the person before you or after you is going to be Carrie Underwood or Kelly Clarkson. So you better bring your A game. And so if we look at 3 or 4 companies and one of them has an unrealistically high pre-money valuation and the others don't, you know, our group gravitates towards the better value for our investors. So valuation is something that you know, has to be negotiated. The other thing that is relative to that is early on, a lot of the early money that's coming into companies comes in the form of a convertible note. And why is that? There's a couple of reasons, because number one, in many cases, it's really too early to put a value on the business. It's a way for you to get early funding, and it basically kicks the can of valuation down the road to a later time when more information is known about the business. So it shows up on your books as debt, but it can be converted to equity at a predetermined time and place and terms. A lot of convertible notes typically will have a conversion discount. In other words, when we convert this, say it's a $500,000 note, when that note is converted to equity, it's buying 20% additional. There's a 20% discount, conversion discount, and sometimes there's interest paid on that convertible note. Within the last few years, we've seen another type of instrument for early stage funding coming out of the West Coast, and that's called a SAFE. And a SAFE is basically a simple agreement for future equity. It's very similar to a convertible note. Some angel groups, however, don't invest in safes because there's not as much certainty as in safes as there are in convertible notes. As you go down the development pipeline, you see it goes from seed funding to startup funding. Typically in the startup funding, you go into what's called priced rounds. With a convertible note and safe, there's no discussion of what the company is worth. But when you get into a priced round, it's raising more money at a predetermined price. That's when the company is valued. You're selling X number of shares at X dollars per share. Typically, that's called a Series A, and that's a priced round. And then from priced rounds, you can go into a Series A and then Series B and so on. But typically, it will migrate on this chart here from left to right. There's also later on downstream institutional investing and VCs. I won't get into that other than the biggest difference between angel groups and VCs is angels invest their own money, where VCs are putting somebody else's money into your company. They're a fund where a lot of people put money in, and there's a few decision makers who are making that call. But typically, angels invest in a lot more than VCs do. They write smaller checks, but a lot more checks. VCs write bigger checks, but they do far fewer deals. So one of the things that every entrepreneur really needs to do is to go look at that top line in terms of the product development and really identify the milestones of your business and try to put numbers to what it's going to take to get there. And when you go out and ask for other people's money, again, knowing that you're going to have to be prepared to sell your business in 3 to 5 years in order to pay your investors back. How much is it going to take you to get to your identified milestones? With Bluetree, many of our companies come to us for a convertible note. They'll say, we're going to use this money to get to these milestones. Then later they come back and say, we got there on time, on budget. Now we need more money. And typically we fund follow-on funding for those companies that have demonstrated credibility in terms of hitting their milestones. So understanding how much you need to get to different phases is really important. Typically there's pre-seed funding in the tens of thousands of dollars. It comes from friends and family. Then you get seed funding through a convertible note, typically, maybe $500,000 to $1 million. And then after that, typically about 18 months after that seed funding comes a Series A, in the $1.5 million to $2 million range, something like that. But it's really important to know how much you're going to need because one of the things we ask entrepreneurs when they come to Bluetree is how much additional money will you need after this? So let's say they're coming to us for a $500,000 convertible note. That's only going to get them so far. We want to know what those milestones are and then how much additional funding they will require, because Bluetree and most other angel groups want to participate in future raises, but we want to know, what the entrepreneur thinks those raises will be. So it's a very healthy thing to get a grasp on your business and identify the milestones and try to figure out how much it's going to take to get there. And then there's a timing aspect to that. But as I said before, if you can bootstrap your company on your own, I say live long and prosper. If you have a family-owned business, there are alternative sources of funding. But if you have one of those rare technologies that's got a great market opportunity and has to go big and go fast, then you definitely want to talk to angels and then later VCs. And I'd be happy to take any questions and look forward to working with your group.
Well, thank you, Don. Our next speaker is Kevin Combs, and Kevin is a founder, entrepreneur, and investor with a successful track record. Hang on, we'll start my video. There we go. With a successful track record of building and/or investing in companies that produce outsized value while maintaining core values of integrity, passionate pursuit of purpose, and consistent sustainability. Kevin's created over $2 billion in revenue and returns for investors over the past 30 years. Recently, he's helped co-found an affordable housing disaster relief construction startup, initially self-funded a very exciting game technology company, and funded a digital social media startup. Kevin is involved in numerous companies' boards of directors and is a founding member of the Country Roads Angel Network here in West Virginia. Kevin will be discussing what he does as it relates to startup funding opportunities and where to look for funding. Kevin?
Hey, thanks, Guy. So thank you all for your time today. I kind of am a very in the moment type of person, and this has been a incredible panel. So, I'll try to frame my thought process here around a bit of what maybe, hasn't been said. So the other thing is I can share my screen, right? Is that possible? Yeah. Does that come up? I think, yeah. Yeah, good, Ann, thanks. So basically, if I think about what Don just talked about, Country Roads Angel Network spun up out of this concept of a group of people in the New River Gorge Regional Development Authority and the Hive, which is an incubator there. I was invited to be on the board a few years back. And I'm a native West Virginian. I grew up in Ansted, West Virginia. My mom and dad had small businesses. We had our ups and downs through the changes in the economy based on coal and the U.S. economy. So I started working when I was about 12 in those businesses. Then I went to Midland Trail High School there, and then I went to West Virginia University. I was a biology exercise phys major, and I got into pharmaceuticals. And so all that kind of built a base for me to eventually get to a point where I started operating businesses. So you could say I was an entrepreneur, I guess. I ran some small pharma companies, and then I ran some larger companies, privately held. And then I made a substantial amount of money for me and investors by running companies and then by making investments. And while I was on this board, Angel Network, I joined this board basically with the concept of, you want to pay forward and give back. And I started learning about where we were with various scenarios in West Virginia, and our financial ecosystem was something I think more savvy entrepreneurs, financial entrepreneurs, maybe use the term capital stack. When you look at the what Don just put up, he's really talking about, and we all have to some degree, where the sources of money are. So what I felt like was a void in West Virginia and started talking about a few years ago, and now as a realization, is this idea of an angel network of West Virginians or people who care about West Virginia being willing to make investments in startup companies in West Virginia. So out of that spilled the Country Roads Angel Network. We were fortunate enough to get Senators Manchin and Capito Moore to help us along with an EDA grant that allowed us to hire Peyton Ballard, who I think is probably on this call today as well. Peyton, serves as the day-to-day face of Country Roads Angel Network. I put the website in the chat area so everybody could have that. But basically, we've spun up with the idea of being a group that wants to support that level that Don just put up in the funding chart, that angel group level. I do want to point out that we are not a fund. That's vastly different. I think there's all kind of fun things that could come out of today, because I think much like the world, there are a lot of different opinions on what's right and wrong and what people want to see and what they don't want to see. And so as an entrepreneur, I think being fast on your feet, listening to as many people as you can. When you're going to go to present to someone like Country Roads Angel Network, try to learn as much about that network as you can in your pre-planning. We're not a fund, so we've grown to about 17 members now. I think we'll probably go to 30 over the course of this year. We have a lot more interest. We've made our first initial investment, which I think Kyle or James one is going to speak tomorrow. There are two co-founders for Iconic Air. Love these kids. I met them a few years ago as a judge in the West Virginia Collegiate Business Plan competition. And they were just exactly what everybody's talked about today. They were passionate. They had competency about their model. They called themselves Iconic EDU. When they initially presented in the business plan competition, they pivoted based on some learnings they had. Vantage Ventures has been kind enough to take them in Sarah Biller and John Chambers' program there at Vantage, and they've continued just to improve their skill sets. They went out and got non-dilutive money through Air Force grants. They got a level 1 grant, which was $50K or $75K. They now have landed a level 2 grant there, so $750K. So they've taken in $800K of non-dilutive money, which investors love to see. So basically, Country Angels Network, I could go through, but you can go to the website. But at the end of the day, we've spun up in Southern West Virginia as a headquarters, but servicing all of West Virginia to make investments. I don't know that I'm going to go on. I may give some time back because I feel like I would be repetitive in a lot of what's said today. But I think the important part to understand is that in this financial ecosystem where you could start out with family and friends or micro loans or whatever it happens to be, and then eventually you'll hear, I think Matt talks relatively maybe right after me. And so you've got, a fund that's designed to invest in companies, certainly some seed type of companies, but certainly into Series A. And, so if you think about Country Angel Network, really, you've just got a bunch of individuals that are going to make a decision as to how much they're willing to invest and then be part of your raise format. For Kyle and James, we actually, the amount of money they wanted to invest, we were the whole chunk of money. I also think I saw Endalumic is going to present. I think Mara McFadden's presenting tomorrow. And Mara was just in our second group of companies to present on a quarterly basis, unlike Pittsburgh, where deal flow probably is large enough to get 3 or 4 companies on a monthly basis. Right now, we feel comfortable with the deal flow in West Virginia as having quarterly meetings. We'll make exceptions to that if a company comes along and have a one-off. We're considering that right now for a company because they need money before our next meeting, and we like some things about what they're doing. So those things can happen. We're not entrenched in stone in our habits, if you will, because the goal, once again, are to make good investments. As Don said, I want to get a return for my money. I do a lot of philanthropic things in West Virginia and other parts of the U.S. But with this, we really want to create the culture. I want people to learn how to become great entrepreneurs, how to seek investment capital, and then we want an entity in the state of West Virginia that fills that void. So that's basically it. Again, I don't recall if we'll have a panel at the end, but if you want to post questions, glad to go there. But you can come to this website that I've got up and learn just about anything you want to about us, or give Peyton or myself a call.
Okay, that's great. And our next.
Hey, Guy, just real quick, it does say, Kevin, what type of tech areas do you invest in? So just, I guess, do you want me to take that now, or you want to wait till the end?
Answer it quickly now.
Yeah. So anything really. It's on the website, but life sciences, agriculture, tourism, those things that will be really prominent in West Virginia, but they're listed on the website. There's nothing really that we won't consider in terms of a sector.
Great. Thank you, Kevin. Our next speaker is Matt Harbaugh from Mountain State Capital. And Matt is a co-founder and managing director at Mountain State Capital, a seed and early stage venture capital firm targeting high growth businesses in the greater Appalachian region. Matt also serves as an advisor to research institutions and national laboratories on issues related to strategy and innovation. Matt previously served as the head of transformation at West Virginia University and was the CEO of a Carnegie Mellon University software spinout that was acquired by Facebook. Matt also spent a decade at InnovationWorks Inc., one of the most active seed funds in the United States, where he served as chief investment officer. Matt will be discussing traditional venture funding and what Mountain State Capital does. Matt, turn it over to you.
Great. Thanks, Guy. And I am unmuted. Good. So thanks for having me. This has been a great discussion so far. And I'm glad that you put back up this funding landscape slide. I think this does a really good job of laying out how the various types of capital fit together. As has been mentioned, Mountain State Capital is a venture capital fund, but we are a seed stage venture capital fund. So if you look on this slide down below there where it shows the sources of funding, we sort of span the two boxes, the one that says seed funds and then the one that says venture funds. We're kind of in both of those areas. And as you see, that means that we co-invest. So if you look at where things overlap there, we often co-invest with angel groups, as well as economic development groups, and we end up serving as a bridge to much larger institutional venture capital funds who come in with much, much larger checks than we can cut. So Mountain State Capital is a $20 million seed stage venture fund. We raised this fund. It took us about 3 years to raise that $20 million. So much like all of you who are entrepreneurs, we are very well versed in raising money. And that was our first big task ahead of us when we decided that we thought there was an opportunity to invest in startups in this region. We had to then go out and convince investors to invest in our business. Our business just happens to be a fund that turns around and invests in startups. So all of the things that we coach entrepreneurs on how to articulate their vision and their value proposition to investors, we've had to do the exact same thing, both in our current fund as well as my partner and I both have had to raise money for companies that we've run in the past. So we're definitely very experienced with raising money. As I mentioned, we launched this fund in 2019 after about 3 years of raising the money. So we've been investing now for almost exactly 2 years. During that time frame, we have invested in 16 companies so far. We're about to invest in our 17th company. We've invested a total of about $7.5 million over the last 2 years. And the geography that we target, we call it Greater Appalachia. So yes, that includes all of West Virginia, but it also includes central and western Pennsylvania, eastern Ohio, eastern Tennessee, eastern Kentucky, western Virginia, as far over as Charlottesville. We have one company in Charlottesville. And we'll go as far south as, say, Asheville, North Carolina. So sometimes I tell people just to sort of picture State College, Pennsylvania to Asheville, North Carolina. You pick up sort of the mountainous regions of a lot of states through there. And the things that region has in common, there's a lot of great universities. There is an increasing number of entrepreneurial activity, good technology being developed, but not a lot of private sector investment going on. Not a lot of investment in general, but certainly not a lot of private sector investment. I think what we have seen in most of those states over the past 20 years really has been that most of them have embraced entrepreneurship and have recognized the importance of technology-based startups to their future economies. And so you do see in most of those states strong economic development programs funded by the state governments. I think maybe later today you're going to hear from Larry Miller from Innovation Works in Pennsylvania. They really were one of the groups that led the way nationally in sort of being a state-based seed funding program. You've already heard from Michelle O'Connor from West Virginia Jobs Investment Trust, which is a similar group in West Virginia, as well as Guy at Inova. So we end up working with those groups as well as with the angel groups. So you've heard from Don from Blue Tree, as well as Kevin from Country Roads. All of these are helping to support the companies as they get started, and that they may be spinning out of these universities. So we also work with university incubator programs. But at some point they get to the stage where they need to raise larger dollars, and there just aren't, they've sort of exhausted all of the nonprofit and friends and family and angel sources of funding. And maybe they get to the point where they need to raise $1 million to $3 million to take their company to the next stage. And that's when a small early stage venture capital fund like Mountain State Capital starts to come into the mix. I mentioned that I have one partner. I actually now have two partners. We actually brought a second partner on board within the last 6 months. So I am based outside of Pittsburgh. I have my co-founder of Mountain State Capital is Mike Green. He is based outside of Morgantown. He lives on Cheat Lake. And then we brought in a venture partner to join us about 6 months ago to focus on life sciences companies, because we saw that a lot of opportunity in that region that I described is around the hospital systems and research universities that are doing a lot of life sciences and medical device research. And my co-founder and I both have more of a software and IT type of background. And so we wanted to bring in someone who really understood that life sciences world. So the individual who we brought on board in October used to be his name is Nick Pachuta. He used to be the head of external innovation for Johnson & Johnson's medical device group. So Nick is based outside of Philadelphia, but he's originally from the Pittsburgh region. And he is able to open doors with big companies like J&J and all of the other major medical device companies for the companies that we invest in, and also help us evaluate any new life sciences companies that we might look at. So that's just been invaluable for us as we look at life sciences companies. Sector-wise, we do life sciences as well as technology, but technology is pretty broadly defined. It's almost easier to tell you what we don't invest in than to say what we do. So things that we don't invest in is, and we do get people coming to us looking for funding for this, so I'll just go ahead and mention it. We don't invest in real estate. So we do get people coming to us looking for funding for real estate projects. We don't do that. We get people coming to us who have services-based businesses and they'd like some startup capital. But really, I'd say our money is too expensive, really should be viewed as too expensive for any company where you can get right out of the gates and start generating revenue. Really, if you can bootstrap it without taking our money, you really should. In this slide that you're looking at here, as you get over into the venture fund and even the angel group, anyone who's investing private sector dollars, you're really looking at giving up part of your business, giving up part of the ownership of your company to those investors. And so, think of it like having to, chop off an arm and give it to these folks. You probably don't want to do that unless you have to. And so the types of companies that we invest in are those companies typically that are building a product where it will require a lot of money up front to build that product, and you won't be able to generate any revenue for quite a while. until that product is built and launched. We can help span that gap and get you to the point where you're starting to scale. But typically we like to come in when you've already got some early, whether it's a prototype or pilot scale version of the product that you're developing, so that we can see some sort of evidence that the market actually will like what you're developing. We call it, coming in as the entrepreneur has just found their product market fit. The fact that the product that they built fits the need of the market that they're going after. And we typically look for some sort of evidence. So we expect that the entrepreneurs that are going to come to us know their industry well enough, and ideally have formed some strategic relationships within that industry so that they can tell us exactly where they fit into the landscape within their industry. They know what the trends are within that industry. They know who the major acquirers are within that industry and why those acquirers might want to buy them and their product. And so we typically come in and we'll invest in that initial round somewhere in the $200,000 to $500,000 range, and then we'll expect that we will reinvest in the company as it continues to grow. We typically take equity. We also will require a board seat on the board of the company. We're active investors. We like to advise and be involved, but we don't run the company. So what you heard up front from Eric about investing in the person, that's absolutely true. We want to invest in people where we believe in their vision and that they will have the ability to take that company and become successful. And then you really, at the end of the day, there's one thing to keep in mind, which you've heard, I think, more than once today, is that when you take money from, whether it's an angel group or a venture capital fund, the clock starts ticking. There is a timeline that we're working on because we've taken money from our investors and we have to return a return to them within a certain amount of time. And that means that that time frame gets pushed down to all of the companies that we invest in. So we need to make sure that we're investing in companies that will have some sort of exit. Will be acquired or go public within, say, 5 years from the time that we invest in them, so that we can get the return from that investment and pass it back up to our investors. So that's just a general overview of Mountain State Capital and the venture capital landscape. I know that I think I may have gone over my time a little bit, so I'll turn it back to Guy.
Thank you. And there we go. Our next speaker is Steve Webb with West Virginia Economic Development Authority. And one of the things I want to say is this group is a powerful collaborative partner in all of our initiatives. Steve Webb is the Director of Financial Services for the West Virginia Economic Development Authority. The organization is charged with the developing and advancing the business prosperity and economic welfare of the state of West Virginia by providing financial assistance in the form of loans, direct financing, and operating leases to industrial development agencies and enterprises for the promotion and retention of new and existing commercial and industrial development. Steve will be discussing traditional venture funding and the role the EDA plays and what they do. So I'll turn it over to Steve.
Thank you, Guy. I know we're running a little short on time, and so I'll try to wrap this pretty quickly. If you're taking a look at the funding landscape slide that's presented on our screens, you'll see West Virginia Economic Development Authority probably falls into the company product stage at build and deliver and scale up. To the right side of the arrow, we do need to have companies that are at least established and very near the startup funding stage. Sometimes we'll get involved that early. Our financing is primarily targeted at expansion of an existing business or growth of an existing business. And if you look down in the source of funding, we are in the loans and bonds category of the source of funding. We do provide loans that are secured, personally guaranteed. They are for fixed assets only, permanent fixed assets, buildings, real estate, fixed equipment. And we are not a sole source of financing. So we are a partner financer. There's an equity piece that has to go into the deal of at least 10%. And then we're also looking at other sources or additional equity to wrap up the capital stack to get you to 100% of your funding need. As mentioned, I know we're close on time and I'm going to exit, but please keep us in mind when you get beyond the startup funding stage, when you're ready to start producing and delivering product. That's a good time to give us a call. Ann Barth with Tech Connect West Virginia is one of our valued board members, and I'm sure that she can put you in touch with our organization. We're also on the web at wveda.org. So give us a look, get in touch, and we'd be glad to help you grow your business once you get it established. Thank you, Guy.
Thank you.
Well, I want to thank Guy and all of the panelists. What a great overview of the different types of funding and when you would go after that type of funding. Really, really informative and helpful to entrepreneurs and those who support entrepreneurs.